Throughout history, financial markets have witnessed a series of dramatic rises and devastating crashes, often referred to as bubbles. These bubbles are marked by a rapid escalation in asset prices, driven by exuberant speculation, followed by a sharp contraction when the euphoria fades. Bitcoin's current trajectory shares many similarities with past financial bubbles, and understanding these parallels can offer valuable insights into the risks inherent in the cryptocurrency market. One of the most notable characteristics of financial bubbles is the widespread belief in the limitless potential of an asset. This belief is often fueled by influential figures who become the faces of these speculative booms. In the case of Bitcoin, Michael Saylor, a prominent advocate and CEO of MicroStrategy, has been a vocal proponent, asserting that Bitcoin is the future of finance and predicting its value will rise astronomically. Saylor's unwavering optimism mirrors the attitudes of key figures in previous bubbles, who were equally confident about their respective markets. During the dot-com bubble of the late 1990s and early 2000s, tech stocks surged as investors poured money into internet-based companies. Leaders like Henry Blodgett, a financial analyst, and the CEOs of high-flying tech firms assured the public that the internet would revolutionize industries and deliver endless growth. However, when the bubble burst, many of these companies collapsed, wiping out trillions in market value and leaving investors grappling with substantial losses. Similarly, in the housing bubble leading up to the 2008 financial crisis, figures such as Alan Greenspan, then chairman of the Federal Reserve, downplayed the risks of a housing market collapse. Banks and mortgage lenders aggressively promoted homeownership, leading to a frenzy of speculative buying and risky lending practices. When the bubble burst, it triggered a global financial crisis, devastating economies and displacing millions of homeowners. Going further back in history, the Tulip Mania of the 17th century in the Netherlands is one of the earliest recorded instances of a financial bubble. At the height of the mania, tulip bulbs were traded at exorbitant prices, driven by speculative fervor. Renowned botanists and traders of the time assured buyers that tulip prices would continue to rise. But when reality set in, the market collapsed, leaving many in financial ruin. The common thread in these bubbles is the presence of influential voices who, often with the best intentions, fueled the speculative fires. Their assurances of untapped potential and inevitable growth convinced many to invest, sometimes to their detriment. Bitcoin's current trajectory, with figures like Michael Saylor championing its cause, raises questions about whether history might be repeating itself. While Bitcoin and blockchain technology offer unique innovations, the fervent speculation and meteoric price increases draw uncanny parallels to these past bubbles. As with the dot-com stocks, housing market, and tulip bulbs, the critical question remains: is the current Bitcoin boom sustainable, or are we witnessing another bubble poised to burst? Understanding these historical patterns is essential for investors to navigate the complexities of Bitcoin with a clear-eyed perspective, balancing potential rewards against significant risks.